My friends, what is going on? Hope you're having a wonderful Sunday so far. Wanted to jump in here and make a video kind of as a follow-up to my video yesterday. There's been a lot of stress on Twitter, social media in general about what exactly is going to happen with APE. And so today I wanted to jump in here, like I said, as a follow-up to what I did yesterday as far as what is my hope for the ticker symbol APE going into the future. Before we jump into the video, you guys know the deal. Nothing I'm giving you is financial advice. It's just to try to help you out, provide as much educational content as I possibly can. That way you can make the best decision you possibly can for yourself, your family, and your portfolio. If you find the video helpful to you at all, please drop a like, subscribe, yada, 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 all that kind of stuff. So let's jump into it. Before we get started, I want to reiterate the fact that in yesterday's video, I talked about how people could convert their APE shares into AMC shares. You cannot do that unless AMC proposes it and it's voted on by the shareholders. So you can't just do that at any point in time. Once again, I apologize. I was wrong after I went back and reread the filing. But the reason I didn't delete the video is because the overall thesis of it and what I was explaining and talking about is still 100% remains intact. But I do apologize for that little 2-minute section of misinformation. So let's jump into what we're talking about today. So the first thing I want to clear up is a little bit about APE. The number one thing that people keep telling me on Twitter is they can't do anything without our approval, and that is just not true. They cannot convert APE into AMC without your approval. They cannot issue more shares of AMC without shareholder approval, but they can, because APE is going to be a preferred stock, they can issue more APE at any point in time that they want to. At launch, there's going to be the same 516 million shares of APE that there are of AMC. Once again, if you haven't watched yesterday's video, please go back and do so. But essentially, you're going to get one APE share for every one AMC share that you have. So if you have 100 shares of AMC right now, once it gets distributed, which I believe is either August 19th or August 22nd, right around in that ballpark, if you have 100 shares of AMC, you're also going to have 100 shares of APE. And APE's value is going to come off of AMC. So if you haven't already, follow Dave Lauer on Twitter. He talks about how dividends are distributions. Okay, the value can't be made up out of thin air, so it's coming off the value of AMC. Now, what it's actually going to debut at or anything along or IPO'd at, nobody knows for sure. I think I keep seeing the minimum is like $2, $3, and $4 is going to be the minimum. So somewhere in that ballpark. So let's say if APE is done and AMC is currently trading at $20, then AMC would go to $16 and APE would be at $4. That's its most simple, basic understanding of what exactly is going to happen. Now, there is like 5 billion total shares of APE that can be issued. Now, Adam Aron has already come out and said that there's not going to be any dilution at its initial launch. So it's not like they're going to launch APE and then immediately dilute it or anything along those lines. But he has talked specifically about dilution is going to happen if they decide to issue more shares of APE. And let me just real quick, we'll just jump out here and we'll go to my Twitter page real quick. So it would only be dilution if we, not the shareholder, if we decide after August 22nd to issue more APEs above and beyond the initial dividend amount. So that's above and beyond the 516 million shares of APE that are going to be available at launch. But as I tweeted earlier, if we were to do that smartly, so once again, first he's saying if it even happens. There's no guarantee it even happens. But I promise you, if you see the price of APE really start to skyrocket, it's going to happen because AMC needs money. If we were to do that smartly, that could be very good for AMC investors. Meaning, if we do offer more shares, then anytime you have that initial offering of more shares, you're going to see the price come down, and then you'll see it slowly rise over time as more people buy up those shares that have been offered. And our track record at AMC is excellent on this score so far. So he's basically saying it's going to happen. It's just when it's going to happen. And nobody knows that. It might be a month down the road. It might be 2 months down the road. It might be 2, 3, 4, 5 years down the road. Nobody knows for sure. Now, my personal opinion on this is going to be he's not going to do that until it makes sense. And when does that make sense? Well, obviously, he's the CEO of the company. He gets to decide when it makes sense, not Colin. But if, AMC is, or excuse me, if APE, let's say the IPO comes out and it's at $4, and then it, runs all the way up to $16. Well, then it might make sense for him to dilute it at that point in time. So let's just let's do an example that makes the math simple for everybody here. So let's say they do it when APE is at $10 and they issue another 300 million shares. Whoops. So that is basically going to be $3 billion. So let me delete this real quick so I can just draw it out for you guys. All right, so let's say APE is at $10. They decide to issue 300 million more shares. Then that means AMC is raising $3 billion. That would be huge for AMC when they need money, okay? It's a company that is not cash flow positive and they have $5 billion in debt. So raising money for AMC, like Adam Aron has already talked about, is going to be important. Now, that $3 billion, they could use it for debt. They could use it for mergers and acquisitions. There's a lot of different things that they could do. They could do it for, other business ventures. Once again, kind of like the mergers and acquisitions. They might be needing money for rolling out popcorn. They might need money for their credit card launch, which once again, I think that's one of the most unanticipated hidden gems of this. You're going to have a lot of people getting the AMC credit card, and the fees that are going to be tied into that. AMC can make a lot of money doing that, but that's not what this video is about. So what Adam Aron is trying to do at the end of the day, my friends, is he's trying to drive out the shorts by improving the AMC fundamentals. He's not trying to squeeze the stock. His job as CEO is to look after the company. And yes, it is to look after his shareholders too. But nowhere does that mean he's trying to squeeze the stock for his shareholders. What he's trying to do is he's trying to improve the fundamentals of the company by making it less attractive to shorts. I don't short stocks, period. Okay? I view shorting stocks as kind of like how I view trolls. I see things that I don't like every single day on Twitter, social media, in conversations. And what trolls feel like they have to do is, man, they feel like they have to pull that keyboard out and just, I'm going to let this guy have it because I don't like him. And that's how I view shorts. Shorts are going to be, they see a company that they don't like, and rather than just going, I don't like that company, that's not a good investment for me, they feel the need to go, oh, not only do I not like that company, I'm going to short it into the ground. I'm going to make that company harder to do business. I want those people to lose their jobs. So that's the way I view it. That's why I don't ever short or anything along those lines, because it's just like I said, it's not my investing thesis. Okay, I'll just leave it at that. So what AA is trying to do is he wants to drive the shorts out. He wants to improve the fundamentals. That way, when people look at the fundamentals of AMC, they don't see a reason to shorts. He wants people looking at AMC and going, wow, this business is cash flow positive. Wow, this business has got a lot of money in the bank. Wow, this company is improving their theaters. Wow, this company is rolling out different revenue streams like popcorns and credit cards and merchandise. That's what AA is trying to do. AA is doing this. AA is playing the long game, which that's what investing is. If you are just looking to get rich quick in investing, you are doing it wrong, and more than likely you're going to wind up broke, okay? So to sum up everything, what APE is giving us is it's giving AMC the ability to raise money, which is what it needs to do. That is a hill that I am willing to die on. You can go back and watch lots of my previous videos. I always said my biggest concern with AMC was the amount of debt that it has. Now, it doesn't have to eliminate all debt or anything like that. Some debt is good, and especially if you use debt to actually acquire assets. But that's not the kind of debt that AMC has. AMC has debt to survive COVID is the debt that they took on, and I don't blame them for that. There's lots of companies out there that had to take on debt to survive COVID, but that's the kind of debt that I want to see AMC eliminate and get rid of. And so APE is giving them the ability to raise money to do that, whether it be through the mergers and acquisitions. Like I said, my personal opinion is any of their unhealthy debt that they have, that's what I want to see them getting rid of first, especially anything that's going to be high interest rate. AMC has a ton of debt, and interest rates are only going to be increasing. So unless any of that is fixed, then those interest payments are really going to start to pile up. So we want to see them raise money. We want to see them improve their fundamentals. This is going to allow them to eliminate the short thesis. And by eliminating the short thesis, making shorts want to get out of the way, then the share price is going to go up. Not squeeze. That's not what his goal is, but the share price is going to go up. I've said multiple times that I personally believe AMC could be a $25 to $35 stock all day long. So when it was down in the $10 range, of course I'm going to be a buyer. I posted multiple buys on Twitter in that range. So that's what I'm looking for. This is what I believe AA is going for. He is giving us a dividend. He is giving us a share count. He is giving us a way where essentially through constant retail buying, you can continue to buy APE, and therefore by continuing to buy APE, you're giving AMC money, improving its fundamentals. Once again, rising tide lifts all boats. And there's the argument though of nobody's going to buy APE. Well, let's say, once again, this is just hypothetical purposes. Hypothetical purposes. AMC's at 30 bucks. It's split in half. $15 is what AMC's at, and $15 is what APE is at. If you were still going to be a buyer of AMC at the $30 level, well, you still got the same buying power. You can buy $15 of AMC, and you can buy $15 of APE. So I don't get the argument of nobody's going to buy APE now, or it hurts our buying power or anything like that. No, because once again, you've got, let me just zoom out here. You've got AMC right now. That is splitting into two different categories, AMC and APE. And the value of APE is coming from AMC. But still together, at the end of the day, you can think of these two still make up AMC. All right. I hope this video was helpful to you. Once again, please like, subscribe, shoot me a comment. Follow me on Twitter if you haven't done so already, Colin_Gladman. I will be getting out the weekly TA, the technical analysis video of AMC's chart is going to be coming next. I appreciate your time. Have a wonderful Sunday. Don't be a troll. If you see something you disagree with, just keep moving. It's not that hard. Just keep moving. Don't waste your day complaining. Waste your day with happiness, with your family, that kind of stuff. Have a good one, my friends.